In this video, I will test this 98.1% win rate secret indicator strategy shared by My Trading Journey to see if it's really this accurate. I will backtest this strategy 100 times with an initial account size set at $1,000 with 2% risk per trade. The person who shared this strategy says that it works really well on all markets and it's suitable for day trading. So I'm gonna do my test on Ethereum USDT on a 15-minute time frame. Okay, this strategy consists of two indicators, and now let's go ahead and add them to our chart. For the first indicator, let's search for QQE threshold. This one by Jose5770. And for the second indicator, let's add extreme trend. This indicator right here. Let's also switch the candlesticks from Japanese to Heikin Ashi. Okay, now we need to change the settings on these indicators. So let's first double click on this QQE threshold and change the RSI length from 14 to 3. And in the star section, let's remove some things that we don't need. Okay, now we need to make some changes to this extreme trend. So let's first get rid of these shapes and change the colors for these lines. Okay, the strategy is complete, so now let's jump into the trading rules. Okay, so we're only going to be looking to buy if we have the price action, meaning the whole candlestick closed above the extreme trend, and the line has to be green color, and the QQE threshold has to also be green. And once we have these two conditions met, we're going to go ahead and place a buy order. As we all know, the Heikin Ashi candlestick is an average price from the previous couple candlesticks, so our buy order will be placed somewhere in the middle of this Heikin Ashi candlestick. The stop loss will be placed at the recent swing low. And we're going to close the position as soon as we have a red bar appeared on a QQE threshold indicator. We see that the risk-reward ratio on this particular trade was 2.92 to 1, which is not bad at all. For short trades, the rules are exactly opposite. We're only going to be looking to sell if the price action is below the extreme trend line, the line is red color, and the QQE threshold is red as well. If the QQE mod is not red yet, we can wait for it to catch up. So we will place a sell order somewhere in the middle of our trigger candlestick. Our stop loss will be set at the recent swing high. And we're going to close the position as soon as we have a green bar appeared on a QQE threshold. Okay, the risk-reward ratio on this particular trade was even higher. It's actually 3.18 to 1, which means that if we're risking 2% of our account per trade, on this particular trade we could have made 6.4% profit. Okay, let me now give you a couple more important examples. So here we see that this short signal was also valid because we had the QQE threshold change in color from orange to red. We see it doesn't necessarily mean that the line has to change color in order to get a new entry. We can also get it from the QQE threshold. And we see the signal was valid because the candlestick was fully below the line. We see sometimes the risk reward is not that high. Here's another example where we would have taken a short position. So here we see the line changes color, the price action is below the line, and the QQE threshold is confirming a signal. If for some reason we missed this signal right here, we have a new one a few candlesticks later. However, this new signal is not confirmed yet because the wick is touching the line. So we kind of have to wait, and there we go, we see on the very next candlestick all our conditions are met. So right away I can tell that this strategy is pretty good when the market is trending. In terms of eliminating losses, I'm not quite sure if this strategy is doing a great job. We see these two long signals were confirmed, but unfortunately they weren't successful. So in the second part of this video I will also try to improve this strategy, so stay tuned for that. Okay, let me give you one more example of a massive trend you could have caught with this strategy. So we see that we first got this long entry right there, and this signal wasn't successful unfortunately. And then right after that trade, we had a new short signal right there, and this signal was confirmed as well. So we see that the risk-reward ratio sometimes can get up to 11.6 to 1. Even though this strategy issues some false signals sometimes, if you catch a winner like that, it will literally cover all your previous losses. Okay, I hope you have understood the rules for the strategy, so let's actually do our backtesting and see if the win rate for the strategy is actually 98%. Okay, so I just done a backtesting and here are the results. So the win rate of the strategy is only 51%. This is definitely something I did not expect. I expected at least 60 or 65%. Even though we had such an average win rate, we managed to increase our account size by 123.17%. And I found those 100 setups within 3 weeks, which means that the average profit per day is 5.8%, which sounds really promising, but these results will be different when trading live because of high spreads and fees. Also note that this strategy only works well when the market is trending. These are the times when we catch in those massive wins. The profit factor is 2.8 and we had 5 consecutive wins against 5 consecutive losses. But take a look at the average win and loss. This is really important. So the average win is 2.59% and the average loss is 8.96%. This is because more often than not we will close the position before the price actually hits a stop loss. So overall, I would say the strategy is not that bad. It definitely makes money, but I really want to improve that win rate by at least 10%. And this is something I'm going to be doing in the second part of this video. Okay, so in order to do that, I decided to actually add another indicator to our chart. And this tool is called the Volume Flow Indicator. This one by Lazy Bear. And now we need to make some really important adjustments. First of all, let's make these lines a bit more visible. Now we need to change the VFI length from 130 to 100. The maximum volume cutoff from 2.5 to 1.5. And the signal length from 5 to 20. And the reason I added this indicator to the chart is to identify the longer term trend and to eliminate losses when the market is moving sideways. And for this strategy we will also switch the candlesticks from Heikin Ashi back to Japanese. Okay, now let's get into the trading rules and see what has changed. Okay, so here are the rules for entering a short trade. First of all, the whole body of the candlestick has to close below the extreme trend. The line has to be red color. The QQE threshold has to confirm the signal, which means this bar histogram has to be colored in red. And finally, we need to have this volume flow indicator bearish. This means that the orange line has to be above the green line and they both have to be positioned below the 0 level. Okay, we see the rules are met and this is going to be our trigger candlestick. Our stop loss will either be set at the recent swing high or at the extreme trend line. If the current price is too far from the recent swing high, you will place your stop loss at this extreme trend line. And for this strategy, we're not going to be exiting the trade manually. We will set a specific take profit target at 1.5 times the risk. Exactly opposite is true for long trades, so we first need to have the price action closed above the extreme trend line and the line has to be green color. The QQE threshold has to also be colored in green and the volume flow indicator has to be bullish. This means that the green line has to be above the orange line and they both have to be positioned above the 0 level. We see the conditions are met and this is going to be our trigger candlestick. Our stop loss will either be set at the recent swing low or at the extreme trend line, and we will be targeting 1.5 times the risk. Okay, let me give you a couple more examples. So here we see the price action just closed above the extreme trend line, the line is green, and the QQE threshold is green as well. But the volume indicator is not confirming the signals because both of the lines are below 0. In this case, you do not wait for it to catch up, you just skip the signal altogether. Okay, so this is where we had another long signal. We see the QQE threshold issued a new long entry. The price action is above the extreme trend line and the line is green color. But if we take a look at the volume flow indicator, we see that the orange line is still being below the 0 level. So again, this wouldn't be a valid entry either. But a few candlesticks later, we had another long signal, and this signal is finally confirmed. Okay, here's another example. So here we see the QQE just issued a new short entry. The line is also red and the volume flow is bearish. But the problem is the candlestick is touching the line. So in this case we will wait for all the conditions to be met. And we see on the very next candlestick we had a valid entry. Okay, I hope you have understood the rules, so let's actually do our backtesting and see if this strategy is any better. Okay, what have we got here? So we see that we definitely increased that win rate from 51 to 66%, and we increased our account size by 253.95%. However, I must say that it took me a bit longer to find those 100 setups. It actually took me 2.5 months. So that's an average profit of 3.4% a day. Also take a look at the equity curve, it definitely looks good and consistent. The profit factor is 2.91 and we had 9 consecutive wins against 2 consecutive losses. I think the results could be a bit better if I let my winners run. So I definitely encourage you to backtest this strategy with a different money management. Okay traders, I hope you enjoyed this video. Don't forget to smash the like button, it really helps with the channel. And if you want to see more videos like this in the future, then feel free to subscribe to Trade IQ.